Castillo here, team leader with Absolute Top Dollar and the best brokerage in the world, eXp Realty. And today I have the pleasure of interviewing the most amazing M.Smith from Movement Mortgage. Thank you for being here, Michelle.
Hi. Thank you for having me.
Literally could not have picked the better day to have you come on when mortgages are in the headlines. Everybody's talking about it. I put it in my stories today. You go on Google mortgage rates and it says 7%. What the heck is going on? Please enlighten us.
Oh my goodness. So yes, we've got things going on, and what's going on is the Fed is trying to slow down this crazy ride that we have been on for the past really 3 or 4 years. And the way to do that is to get like that reining in of buying everything, not just houses, everything. So basically, if they keep on ratcheting this up, they're going to have things normalize, because you and I have been in this market. It has been a lot of things. It's been a roller coaster ride, but normal is not one of them. So as soon as they get a hold of that, we will see things normalize, and there will be a pleasure to go along with our current pain.
Right. That makes so much sense. And so this is a big question. Are we at a plateau of the mortgage interest rates, or do you think we're actually going to go higher from here?
Okay, great question. You always ask great questions. So the answer is it depends on our response, right? So the Fed's job is to keep everything balanced. We need to keep people buying, but not going crazy where there's literally no supply. So you got to get out of this no supply thing and a ton of demand, because what's happening is that people can't afford houses anymore. So there are areas that people literally have to move out of because they have been literally priced out of the market. You and I both know this because we're both in these markets. So they're going to try to temper things to bring it down to a place of normal. So at the end of the day, do I think that we're finished? No, they promised 4. We've got room, a little bit of room to continue to go. I don't think that we're going to go crazy higher. But again, it's going to depend on people's response to these rate hikes. If the market cools, then they're going to pause because it's working, right? If it doesn't work and you still have the lines and you still got the insanity, they're going to keep on ratcheting that up. And if all of that doesn't work, we're going to have a recession, and recessions are typically good for housing. Believe it or not, it's almost like COVID. How could COVID have been good for housing? Because you're in your house, you're no longer out spending. So either way, I think that this is going to be overtly good for housing, but right this minute, we're definitely in a pain point for sure.
So interesting thing is like, everybody talks about the last crash, everybody's always references, they're constantly like tying now to 2008, and at the beginning, everybody was like, this is nothing, 2008 was all about mortgage fraud. It was all about this. There's no way that can happen again. There's no way. Whereas now this is more of a global, this is more of like
it is global.
It's a total economy. It's not just mortgages, it's groceries, it's gas, it's everyday products. It's just the whole world is in a crunch, a recession, right? So from what we know about the past, I guess something that's been on my mind is like, how long would something like this last? Like we saw COVID where it went down to, I think right before COVID, like in 2019, we were at like 4.5, like we were right there, like mortgage, they were actually a little bit high. I remember.
No, you're right. They did pop up for a while.
They were up for a little while, and then COVID, everything happened. And then you decided, oh, let's go down to the bottom. And we went to like 2%. And I'm sure you did plenty of deals. People have right now refinances at 2% for 30 years. True. I mean, it's crazy, but how long, like only since 2022 is when we started seeing these like increase. at some point, like you said, when we stabilize, but how long, I mean, will this last? Like, what do you think this is like the new normal of like a 7% interest rate or?
I don't, because something has to give, right? So what's going to happen right now is we're on the edge of a recession. You're standing, you're looking over the dark abyss, but we're not there quite yet. And so the Fed is now doing what they should have done last year. They really are a little behind the 8 ball. They're not calling me for advice, but I will tell you that I feel like that this to this extent did not need to happen. So in the end of the day, a lot of it again is going to depend on consumer response. So if you say like, what is your best guess? And I'm a pretty good guesser. My best guess would be that this is going to flow into next year. And I do personally think that we're going to have a recession. And I personally think that we almost need to do that because right now we're circling and sometimes you just got to flush. You got to flush, got to go through the pain point, and you have to have a reset. And a recession will be a major reset. And it's not a scary thing. Again, housing does pretty well in recessions historically, except for the last one that actually caused the recession, which is a different story for a different day. This, you're right. This is different. And I think it's going to be short term. So if you're a seller, what do you say to your sellers? What do you say your seller is? Take the great deal. If you've got a great offer, if you've got a qualified buyer, even if they're only putting 5% or it's a veteran and you may not have considered that, you would only consider cash 3 weeks ago, right? Think about how quickly this has changed.
That's what I'm seeing, it's like this very moment, like when we do another video next year, it's like this is unfolding right before our eyes, like we're in it right this second. And I think that that's the challenge of like this exact moment is that you have the sellers that think, hey, we're still there. I'm selling at the top of the market. I'm going to get these multiple offers. I'm going to huff and puff. I'm not accepting. I'm waiving the inspection period, all that kind of stuff.
Yes.
Where really traditional real estate is a beautiful way to do a transaction,
Yes.
I was the queen before COVID. I was the queen of simultaneous transactions. Like, a lot of realtors don't like to do them because they're high pressured, and it's like you're selling their house and then you're buying the house and you're closing on the same day. It's a lot of pressure, but it was a really good gift that I had to be able to handle it all because most buyers are sellers. Most sellers have all their money
100%.
in equity. Okay. But they can't, not everybody can sell their house and go move in with a family member or go rent an apartment or go, and that's what's been a big holdup during all of this, this experience. So I want to get back to the regular traditional market where I say, hey, I have my house on the market. We're selling, I want to buy your house. Yes. This is our closing date. This is this, getting back into some of these traditional ways that people did things, I think is just going to be healthy for everyone all around.
Right. Where you have an equitable transition of this person has some power and it goes to this person and then back and forth. There's a give and take where you've literally got a transaction where both people win. Buyers have not been winning. So what's the goodness of this pain point? Because it's painful. The goodness of this pain point is that we've all got a moment to stop and take a breath. And what does that mean? Borrowers, understand something. Where you were losing out, that if you didn't go into a contract today, take a moment, get your credit score up, save your money, and make the offer with a 5% down where your realtor told you before, don't even bother. Mm-hmm. So now you've got a shot. And I really do believe that these rates are going to come down. So I believe that there will be an opportunity to refinance. So I don't think that you're going to be quote unquote stuck with a high 6 or 7% loan forever, because you and I both know that things change. They change for the worse. They change for the better.
One thing I wanted to ask you was, because I've been hearing this a little bit. I haven't been actually on any deals where the buyer is doing this type of financing, but I've been hearing about people doing like an adjustable rate that they've been, because the rates are at like, today now it says, high sixes or maybe seven, but like going in at an adjustable rate because it's lower on the front end, and then it's like for 5 years, like a 5-year arm. Is that something that you would recommend for somebody
Well,
to do? Or
I will tell you, up until today, any bank that you call, the adjustable, and where Fannie Freddie are pricing adjustables, is pretty much been the same as a 30-year fixed. So I
okay.
literally said to a colleague today, I'm interested to see what's going to happen with adjustables because they're going to make a comeback. They are going to make a comeback. But I
Mhm.
do believe this, and you and I both don't have any salesman in me. Even though it's what we do, we put people first. We put people
Always.
first before we
Yeah.
put ourselves first. And that really is where your referral business comes from, because people say, this person's a straight shooter and they're going to give you advice, not for them and their pocket. They're going to give you advice for you and your family. And that's
Right.
given longevity to a career, because this is a career. So I
Right.
do believe that refinancing is going to make a comeback. I think that we will see lower rates next year. I think that we will see lower rates next year because I think that we will have a recession. That's my personal opinion. And again, yes, we will start to hear that word again, adjustable rate mortgages, but understand that if you start off at 5 and it adjusts in a year, I'm interested to see where Fannie and
How
Freddie
it's
are going
gonna
to price
unfold.
these.
Yeah.
Yes, because
And
this is
and
literally,
so
like you said, this is all happening like in real time today. We're talking today.
exactly.
All of this is going on right now. It's
Right.
changing by the minute.
So the last, recession or the last crash that we had, something that happened was all of those mortgage, like what do you guys call them? Like subprime, like
Yeah.
the subprime market like completely dried up. Like
Yep.
they completely took all their chips off the board. They were not putting their money out into the market lending. Is
Yes.
that something that probably we're going to see? Because I feel like there's so many products in the market right now. I mean, like there's so many ways to get money, for a loan. Or do you
Yes.
think some of these guys are going to start pulling off and those are not going to be available anymore?
Yes. You're
Okay.
spot on. So what happens when we go through a time where we're not going? So what did we learn from the crash? We learned a lot. And what we learned is that you can't lend money on air. You can't lend money on these appreciations. So learning from the past, you are going to see all of the little bit crazy mortgages that were making a comeback. You're probably going to see those pull back a little bit and say, we really are going to become a little bit more conservative, which also you can't repeat the mistakes of the past. So all of everything that we're going through today, even though it's not fun, it's going to serve a purpose. And the purpose is buyers are going to have a little bit of power again. Sellers are still going to get a fair chance. You and I are in the promised land. You're 100% right. You said it earlier. Florida is the place where people want to be. So you're not going to see some big crash in values. I really don't believe that's going to happen. Especially when you're next to a big city with a lot of commerce. When you've got jobs, people want to live there, the weather's beautiful, you're going to be fine. But you're not going to see these 20% appreciations every 6 months. It's crazy. That can't continue. So again, I think that we're headed back to an equitable transaction. It needs to happen. It does.
So one thing I do want to touch on is I have, on our YouTube channel, we have also a lot of realtors, okay, that watch our channel and they grow and they learn, and we've all been on this high, okay, and everybody in the business has made the most money probably they've ever made in a long time in the real estate business, okay, and just even if you just got your license and you were like, woohoo, cash and checks, because real estate was that easy. Okay. And I remember when I started, it was just, a lot of hard work, a lot of hustle, a lot of hard work. And it wasn't so easy like it has been these last 2 years. Going into like a recession, like you're talking about, like what are some things of tips that you have maybe for realtors, mortgage brokers like yourself? What should we, prepare ourselves for, mentally, financially, of what we're going to walk through maybe the next 6 months or to a year?
Oh my goodness. Best question ever.
Woohoo.
2 words, market share. So when you go through periods of pause, and you're always going to do it, you're always going to have, when you're self-employed, when you're commission, you're going to have highs and lows. That's the name of the game. It's what we all sign on for. So what do you do when you're not out writing 9 million contracts a month? I mean, I literally could have done twice the amount of business if I could have just cloned myself, because it was just like standing in a money machine. It was crazy, crazy. So what do you do in these moments? You stop what you're doing and you point blank focus on your market share. You do videos, you reach out to your people, because let me tell you what most people's very common response to tough times. They duck their head, they complain, they're scared, they're nervous, they talk about how bad it is, instead of saying, you know what, thank goodness, the one above, I'm going to take a moment and I'm going to work on my market share. I'm going to polish my craft. I'm going to take time to take those classes on condos. Condos are going to be pretty big because they're less expensive.
Right.
I'm going to take that time to learn every program to polish my craft, because one thing is going to happen this time next June, and you and I should make a date to talk this time next June. 50% of all people probably will not be doing this anymore for a living, or they will not be doing it as a full-time job. Right. So what does that mean? It means that the cream rises to the top. What does that mean? It means that only the best and brightest, the thinkers, are going to be left standing. And it needs to happen. When your waiter in the restaurant is also a realtor who's never done a deal, and people are putting their deposit in this person's hand and they have no clue what they're doing, it probably is a time for that type of professional to be focusing on something different. So this is the time to double down. Right. Double down, market, save your money. Know that you're not going to be standing in a money machine. There are now so many advances. Zoom meeting. In the old days, you got dressed, you got in your car, you went and you sat with somebody. I can now train an entire office. Literally just did a training yesterday on a Zoom meeting.
Right.
Everybody's sitting in their home, and you learned every bit as much. Study your craft, polish yourself, literally reach out to all your clients that gave up. Stay in front of those people, because you know what? Right. Once you get bit and you really want a home, you're going to buy. It's a matter of timing. So this is a time to work on your CRM. This is a time to polish your craft. And this is a time to learn.
Right. Yeah, that's, and a lot of people did that when we got locked down in COVID. Yes. Like that's what I saw a lot of my colleagues doing. Everybody kind of really doubled down and was like, I'm going to do this, I'm going to do that. And then we just exploded.
There was no time.
Yeah. But I think, the moral of the story is, for realtors, for buyers, for sellers, is that we're basically getting back to a traditional market. The market is not going to completely bottom out. Like what happened in 2008. That's what people, there's those doomsdayers, those YouTube videos where they're like, that's it, it's over.
Yes, those are the people that invested in a bomb shelter and they've got canned goods. Yes, don't listen.
Exactly. And fear sells. Let's be honest. Like fear sells. If you look at those guys' videos and stuff like that, I mean, they've got like so many views because fear does sell. It's because fear is within all of us. but it's false evidence appearing real. It's always like a projection of what could happen, but not what's actually happening, you know? And so I think just, the moral of it is that we're all getting back to a traditional market. You know, being a mortgage broker, being a real estate agent is a very high caliber job. It's a lot of big decisions. There's a lot of money involved. There's a lot of, negotiations. There's a lot of things at risk, right? When you're doing a
Yes.
mortgage deal, when you're doing, getting back to the good people are going to be here, and if a serious realtor, you're going to be fine. If you're a serious seller that really has to sell because you got a job relocation or you have to upsize or downsize or whatever the case is, you're going to sell your house, Now, if you're
Yes.
just like a gambler, and you're just like, oh yeah, put it 50, it was funny during this whole thing as a listing agent, I was almost scared to tell people not to list at a certain price because I'm like,
Yes.
shoot, I'm like, I want them to get it, But
Yeah.
when I was looking at the comps, it didn't make sense. There was no comps that said this house would sell for this price.
But they got
I
it.
didn't want to shortchange anybody. So I was like, let's give it a shot, and then
Yes.
it would fly off the shelf. So getting back to like, hey, guess what? To sell a house, you need at least 3 comps to say that this determined the value of your house, And if you are a buyer and you need to buy, guess what? You're not going to have to liquidate your 401k. You're not going to have to buy a house, 400,000, a 500, $500,000 house, and you didn't even have a home inspection. You know, like, like it's some of the stuff we've been doing has been just ludicrous, has been crazy. So I think the moral is, from what I'm getting from you and talking, is just we're getting back to a traditional market. And as long as we can all go for the ride, things will stabilize and we'll get back to, normal interest rates. What do you think? Okay, because we're going to do this next year, June.
Yes.
What do you think that we're going to normalize at as far as interest rates?
I think that we are going to land in the 4s, maybe low 5s. That's what I think. I think because that's always what normal has been. Remember something, when you see 2 and 3% rates, it's because the government is buying government-backed securities. And as taxpayers, you own 25% of all mortgages that are out there right now. And so at the end of the day, that's not normal. The market should just be left to be where it is without this false intervention that it's printing money is basically what you're doing. So we need to get back to normal. And the ride was great. And a lot of people got a really low mortgage, but at the end of the day, we need to get back to an equitable where the buyers got some power, the sellers got some power. Sellers can still sell at a good price, but they're not going to silence a buyer where it's only a cash deal. It's going to return to normal, and you're going to need to hire a professional real estate agent who knows their craft. So this is the time.
Right. Excellent. Michelle, you are phenomenal. Thank you so much.
I appreciate you.
Yes. So I am going to link all of your social medias below so people can get in touch with you. I like so much about you. You're so much like me that we take calls from clients and we spitball with them and we brainstorm with them, because real estate, getting a mortgage, buying a house, selling a house is so much about planning and articulating, And that's one thing that I really admire and I like about you. And we've continued our relationship, is just other brokers, they don't even give you the time to actually have those calls, And so if you guys are thinking about, how to structure your deal, or you want to buy, but you're not sure if you qualify, contact Michelle. She's a gentle beast. Okay. I will say that.
We are very similar.
Gentle, but
we are going to get it done, and we're going to get it done with integrity and hard work.
Yes, absolutely.
So,
okay.
I appreciate
Thank you a million bazillion. You're the best. And we will do this again, if not before, but we will do a recap to see where we got with the whole thing. Okay.
That is the plan.
Okay.
Thank you.
Okay.